So last week, we started relevant costs for decision making, and we said the relevant costs are costs that are directly attributable to a particular course of action in making managerial decision, and that any cost that will be incurred purposely as a result of taking a particular course of action is referred to as relevant costs. And we also said that there are basically three attributes of relevant costs, including future, two, incremental, then three, cash flows. And we said that relevant costs must relate to the future. Any costs that have been incurred in the past, which represented some costs, are irrelevant and therefore should be ignored. Not only that, we also said that incremental costs are costs that change between alternatives as a result of the decision taking. They represent the increase or decrease in cost item as a result of taking a particular, undertaking a particular course of action. Then we said future cash flows are relevant costs, unlike notional costs like depreciation, amortization, interest, or provision, which does not involve movement of cash, which simply means that if you see depreciation, amortization, interest, or provision in a question, they are not relevant because they do not involve movement of cash. They are not cash flows. They are just notional costs. Okay, and therefore should be ignored. Please mute. Okay then. Um. Okay. Please, once again, at all time, always mute yourself. If you want to talk, please raise your hand. It's distracting when there's a background noise from your own hand, please. Very distracting. Okay. Now, thereafter, we'll move on to discuss. I demonstrated for you how to identify relevant costs for material and labor, because majorly on the day of your exam, if you are given question under relevant costs, certainly where you may have issue is on how to identify relevant costs for material and labor. So under relevant costs for material, I gave you three line items that you must take into consideration. Number one is current value, current purchase price. Then number two, disposal value. Then number three, historical cost. We said that the current purchase price represents the amount at which the item of inventory can be purchased currently in the market. So it is also known as replacement cost. And we said that current purchase price should be used if it can be ascertained that the material is in frequent use and will be replaced. Therefore, the replacement cost or the current purchase price will be the most, will be the relevant cost to select. Then we'll talk about disposal value. We said that disposal value, which is also known as net realizable value, scrap value, resale value, or trade-in value. They represent the amount at which the item of inventory or the material held in store can be disposed of or sold, okay? Because the material, you already have it in the store. Maybe due to over purchasing, you don't need it again, then you dispose it off. So the amount the company will realize from the disposal is what is called disposal value or resale value or scrap value. And we said that disposal value will represent a saving to an organization, okay? And of course, you consider disposal value if it can be ascertained that the material is no longer needed or will not be used and can be disposed of. So as a result, disposal value is a saving and should be considered. And then I explain further to tell you that on the day of your exam, certainly examiner will tell you that the material will be disposed of at a cost. And I said that it is not a cost. you are going to interpret it to mean a saving, because when you dispose the item of the inventory, so when you dispose of the material, you are going to get money in return. Therefore, it's a saving to the organization and not a cost. Even when examiner go further to tell you that the material is toxic and can be disposed of at a cost, forget about whether it is toxic or not. Provided the material will be disposed of, it's a saving to the organization. That's true. Then number 3, we'll talk about the historical cost. We said historical cost is the original amount at which the item of inventory was purchased previously, okay? Was purchased previously, and it is also known as a sunk cost or past cost. So historical cost is irrelevant and should be ignored when you see it in a question, okay? So those are the items we discuss under how to identify relevant costs for material. I also gave you the diagrammatical representation of this, okay? I don't want to go into that again. We've already explained that. Then we talk about how to identify relevant costs for labor. So under labor, I gave you 2 line items, and I told you that each line item must be examined critically in the determination of relevant costs. The first item is spare capacity, then the second one is full capacity. Under the spare capacity, we said that when an employee is not fully engaged or an employee is working below the required or below the normal working hours, okay, when this happens, then there will be spare capacity or idle time, okay, there will be spare capacity or idle time. And I also give an example. Say, for example, an employee suppose the normal working hour per day for an employee is 8 hours. If the employee is currently working for 5 hours, it means that the employee will be idle for 3 hours. So if the organization has a special order to be executed and that special order needs 2 hours of the employee, so the special order will be executed using the spare time of the employee. Therefore, no additional cost will be incurred on that special order for labor. So the bottom line is that when there is spare capacity or idle time, relevant cost is equal to 0. That is, nothing will be charged. Nothing will be charged under spare capacity. So that's the treatment of spare capacity. Then, under full capacity, we said that employee on a monthly salary are usually at full capacity. So full capacity means that employee that are supposed to work for 8 hours in a day. In fact, at times the 8 hours may not be sufficient to complete the task, but they are working at full capacity. So no spare time at all. So when this happens, how do you determine relevant cost of labor? There are 2 things I gave to you. I said that when there is full capacity, okay, there are 2 things that can happen. One is that the company can employ more labor in the market. So where you are working at full capacity, you don't have extra time, you don't have spare time at all for any other thing. So when there is an order for the company to execute, the company may need to recruit additional labor that will come and execute the order. Therefore, the cost the company will pay for the additional labor being recruited, then that cost is relevant. But the cost of the cost of the current employee that is on salaried, because salary is a fixed cost. Every month you earn your salary, so it's a fixed cost. It will not, provided the fixed cost will not change, provided your salary will not change, so that fixed cost is irrelevant, because relevant costs are costs that change between alternatives. So if your fixed cost will not change, will not increase, so in that case, there is no need. That salary will not be considered. So at full capacity, if the company can hire more labor, the additional cost that the company will incur as a result of that is relevant and should be considered. Then the second part of under the full capacity is that if the company cannot hire more labor, so if the company cannot hire more labor, then of course there may be an opportunity cost arising from the diversion of resources. Okay, so as a result of diverting resources, the company may lose contribution. Okay, the company may lose contribution as a result of that, because there will be low productivity as a result of diverting resources, which is also known as the opportunity cost. So this is what we discussed last time, and then we also had illustration. We had one illustration to buttress our point. So at this point, Priska, please mute yourself.
Okay, sir.
So we had illustration. We had one illustration, which is illustration number 1, which took us to this particular question involve, there are 2 stages. One is to determine the relevant cost. Then the second stage is to write a report to the management of Oju Elegba. So that we did last time. So today we are going to have additional illustrations. So I'll be very happy if I can give you additional 2 illustrations, and that will be end of relevant costing. So every other illustrations or past questions you have in this material, so you can always get solution in another material I've developed for your own benefit. But for today, let's quickly go ahead and have another illustration. Okay, let me pick one big question. The kind of question that will be making you to sweat on the day of your exam, even though you are writing the exam under AC, under air condition, but because of the dictate of the question, because of the voluminous of the question, you may be sweating, you know, cleaning your face every minute, every second. Okay, then. So let's have somebody that will read this. Let's see. Let's start with this one. Yeah, let's start with this Adepo kind of a question. Now, this particular question has been tested by ICANN twice. Initially, it was tested in 2019 November. Then 2020 November, December, it was also tested. It was repeated. So let's go through the question together and see how we are going to. It's a different scenario, a little bit different from what we generally do under relevant costing. But let's see. Let's go through it together. Okay. So who will be reading for us? Yes.
Oh, yeah. Which one, sir?
Okay. Yes. Kunle, you will read the next one. So Joy was the first person to talk. Yeah, Joy, read illustration number 4.
All right. Sorry, I want to open the question from my phone so I don't drag.
Oh, okay.
Adeco Nigerian PLC. Sorry, just give me a minute. That's illustration 4. Adeco
Yes.
Nigerian PLC is a large and diversified company with several factories. One of its factories that produces APL has not been able to meet its sales target for over 2 years. The board has mandated the company's management to take an urgent decision on what to do with the factory. The management has therefore set up a committee of 3, the factory manager, the marketing manager, and the management accountant, to analyze the situation and come up with a report on what they felt the management should do. The marketing manager has submitted 2 proposals to the committee. These are: 1, a sales volume of 25,000 units can be achieved with a selling price of 13 naira 50 kobo per unit and an advertising campaign of 37,500 naira. Or a sales volume of 35,000 units can be achieved at a selling price of 11 naira 25 kobo with an advertising campaign costing 52,500 naira. The management accountants work on these proposals with the information provided by the factory manager and show with calculations that will help the committee determine which proposal to be recommended to management. The management accountant is also to provide a third option, the closure of the factory. The factory manager has submitted the following information to the management accountant. All figures assumes to be correct. The following additional information has also been made available. 1, there are 50,000 kg of material A in inventory. These originally cost 1 naira 5 1.5 naira per kg. Material A has no other use, and unless it is used by the division, it will have to be disposed at a cost of 750 naira for every 5,000 kg. 2. There are 30,000 liters of material B in inventory. Any unused material can be used by another department to substitute for an equivalent amount of a material, which currently costs one naira. Is this 1,000 or 1.875 naira?
1 naira 875 kobo per liter.
The original cost of material B was 75 kobo, that's 0.75 naira per liter, and it can be replaced at a cost of 2 naira 25 kobo per liter. 3. All production labor hours are paid on an hourly basis. Rumors of the closure of the has led to a large proportion of the department's employees leaving the organization. Uncertainty over its closure has also resulted in management not replacing the employees. The department is therefore short of labor hours and has sufficient to produce only 25,000 units. Output in excess of 25,000 units would require the department to hire contract labor of a cost of 5 naira 625 kobo per hour. If the department is shut down, the present labor force will be deployed within the organization. 4. Included in the variable overhead is the depreciation of the only machine used in the department. The original cost of the machine was 300,000 naira, and it is estimated to have a life of 10 years. Depreciation is calculated on a straight line basis. The machine has current residual value of 37,500 naira. If the machinery is used for production, it is estimated that the resale value of the machinery will fall at the rate of 150 naira per 1,000 units produced. All other costs included in variable overhead vary with the number of units produced. 5. Included in the fixed production overhead is the salary of the factory manager, which amounts to 30,000 naira. If the departments were to shut down, the manager will be made redundant with a redundancy pay of 7,500 naira. All other costs included in the fixed production overhead are general factory overhead and will not be affected by any decision concerning the factory. 6. The non-production cost charged to the factory is an apportionment of the total non-production cost incurred by the factory. The committee will be meeting in a week's time to prepare its report to management on the line of action management should follow. Either one of the marketing manager's proposal to close down the factory. We are required as the management accountant of Adeco PLC to prepare detailed calculations to support the committee's recommendation to the management whether to reduce production to 25,000 units, reduce production to 25,000 units, or shut down the factory. B. Discuss the management accounting technique and principle that a management accountant will apply in preparing calculations to support management decision in such a circumstance as above. C. A customer has just placed a special order for 25,000 units of paper, and the customer is willing to pay 12 naira per unit. Advise the management whether to accept or reject the order. Assume that for any shortfall in material A required to produce the order, it can be bought at a price of 2 naira per kg.
Thank you very much, Joy. You can see this is a very voluminous kind of a question that can throw students off balance. And then on the day of your exam, when you are faced with this kind of a question, please don't get carried away with the voluminous of the, with the details of the question. Just take a very deep breath, and the first thing you need to do is to understand the requirements of the examiner. Once you understand the requirements, you will not struggle to solve the question. Like, for example, in this case, the A requirement says that you should prepare detailed calculation to support the committee's recommendation to the management. So you want to prepare detailed calculation. So first thing that should cross your mind is the examiner is asking you to prepare detailed. What kind of calculation do I want to calculate? It could be anything. This could be relevant cost. It could be operating statements. It could be anything. However, the body of the question, the dictate of the body of the question, or the direction of the question will tell me what examiner want me to do. All right. So you will see that when Joy was reading the question, we can see sales volume. We are given sales volume. We're also given selling price. So which is a deviation from the normal relevant costing, because when you talk about relevant costing, we don't need anything like sales value. Okay, we don't need anything like sales value. What you want to prepare is just cost. But in this question, the examiner has given us selling price. Okay, we have been given selling price. So which means that in this particular question, you are going to have cash inflow. You also have several costs embedded in the question, meaning that you're also going to have cash outflow. So in this case, this question can be likened to operating statements, because under operating statements, you have inflows, you also have outflows. Okay, so under the marginal and absorption costing, we have specific categorization of those cost line items. But in this case, we don't need anything like that. However, so examiner has asked me now to prepare detailed calculation. What am I supposed to do? I don't need to waste time. Since I can see selling price in the question, I'm also given sales volume. I have other costs in the question. That means I need to determine the operating performance at each options available. Under option 1, which is to produce 25,000 units, option 2, 35,000 units, option 3, then to shut down. So under each of them, since I have sales volume, then anyone that give me the highest, net profit or thereabout is the option I will select. But the beauty about this question is that examiner did not ask me to advise. You as a management accountant, you are only required to prepare detailed calculation that will support the committee's recommendation to the management, because the marketing director, the factory manager, they have provided you with requisite information that you are going to need to do the calculation. So this is where you have a responsibility as a management accountant. You are the one endowed with the requisite skill and knowledge to provide that detailed calculation to the committee for the purpose of advising management. Another important thing you need to take into consideration in this question is that this question has to do with decision making, okay? Because the company wants to know whether they should reduce production to 25,000 units, 35,000 units, or to even shut down. So there is decision to be made. There is decision to be made. So whenever you have anything that has to do with decision making, you need the principle, you need the technique, you need the concept of marginal costing technique. Remember, when we did operating statement, I mentioned to you specifically that marginal costing technique is a technique designed principally to support management in making managerial decisions. So anything that has to do, whenever you have a question that has to do with decision making, one thing should cross your mind that you are going to need the knowledge of marginal costing technique. So in this case, we are going to apply the concept of marginal costing technique. Now, not only that, The principle of relevant costing will also be applied because it is the principle of marginal costing. We are going to apply the knowledge of the concept of marginal costing to do our calculation. When we are doing the calculation, we need to apply the principle of relevant costing because it is the principle of relevant costing that will tell you out of the several costs given to me, which ones are relevant, which ones are not relevant. Okay, so without much ado, so let's move forward and solve this particular question. So at this stage, I will need to switch to the working notes. So please open to the material at your own hand so that we can follow together. Because when I'm switching from between pages, you won't see the this question again. It's only my notes that you are going to be seeing. So let me stop sharing and share the notes. Share the working notes. Okay. Please, once again, I will encourage every one of us to abide with the simple rules that we have created together. I don't like a situation whereby you just open your speaker and then the background noise from your own hand is distracting the class. Please stop it going forward. If you want to talk, just raise your hand. I will answer you instead of causing the distraction in the class. Please, I can't be switching at all time and be muting people. Okay, then. So the name of this company is Adecco. Therefore, I will come here. Solution to illustration 4. Okay. Number A. So examiner asks us to prepare detailed calculation suitable for recommendation to the management. So in this case, we have already identified that in this question, we are going to apply the marginal costing technique as well as the principle of relevant costing to do the calculation. Therefore, I will then come here because in this question we have inflows and outflows. I have we are given sales unit and sales value, selling price in the question. So we also have other costs. So in this case, we are going to prepare the operating performance, which is profit or loss at the end of the day. Therefore, if I like, I can say detailed calculations. If I like, I can say income statement. So whatever I put as my heading, so that really does not matter. What matters is for you to know the right thing to do. So I can come here to say income statement. Don't come and be using marginal costing techniques. So just ignore those ones. If I like, I can call it detailed calculation. So that's that. Now, before you put your pen to paper on the day of the exam, if you are faced with this kind of a question, please, you have to digest the question, understand the dictate and the direction of the question. Then you need to articulate your points. You need to articulate how you are going to present your calculation, how you are going to present your work, so that you don't have so much rework. Because if you make a mistake, certainly you are going to cancel and start all over again. So it is better for you to take your time, digest the question, understand it before you put your pen to paper, so that your book does not look rough. So in this case, since in the question I have 3 options. One is to produce 25,000 units, the second one 35,000 units, and the third option is to shut down. So all your income statement will be based on those 3 line items. Because I don't know the extent of my table, but I will just come here to say 25,000 units. That's option 1. Option 2, 35. Then option 3, shut down. Okay. figures in thousands. Okay, then. Now, because like I mentioned, there is no need for you to do the kind of categorization that you did under marginal and absorption costing under operating statement. But here I can call it inflow and outflows. So I can just say inflows. So I will start from inflow. Inflow means all the cash inflows that I have in the question, I will accumulate them because in this question, we have sales, we also have sales units, we also have a selling price. That means I'm going to have total sales. So if there are other sales, if there are other cash inflows that I have in the question, I will accumulate all of them under the inflows. So all the cash outflow too, I will accumulate them. Then I will now find the difference between the two. That will give me the net cash flow or profits. Okay. So let's go back to the question and follow the scenario. Remember what I told you when we had class last week. I mentioned to you that relevant costs are solved through the additional information. Okay. So when you are solving questions under relevant costing, you are going to forget whatever number that is given to you in the table because last week I provided you with the exam tips. Number one is that relevant costing questions are solved through the additional information, meaning that whatever you are given in a table, like for example, this table that has been given to you where you have budgeted units of 50,000, all those items. So you ignore them. You don't have anything for now. You don't have anything. You are going to assume that most of those numbers are not relevant. So you move straight to the additional information. Then another tip that I provided for you is that on the day of your examiner will give to you disposal value, and you are going to be told that it will be disposed of at a cost. It is not a cost, that you are going to treat it as a saving. Okay. Then number three, tip that I gave to you is that on the day of your exam, when you are solving any question under relevant costing, whether examiner asks you or not, you have to state your assumption. You need to let the examiner know or understand your perspective, how you arrive at your numbers. Very, very vital. Okay, you have to state your assumption. Whether examiner asks you or not, you must state your assumption for you to be able to earn your full mark. Because on that day, mostly the calculation that you do, the calculation that you are going to do will not attract as much marks as the assumption. Assumption usually carry more marks. At times, even your calculation may not be more than maybe less than half a page. Your assumption may take 1.5 pages, even 2 pages, depending on how the question is being structured. So usually assumption carries more mark than the calculation that you want to do. And that's why it is important at all time, whether examiner asks you or not, you have to state your assumption. So these are some of the tips I gave to you last time, but quickly. So let's solve this question. Now, so based on this, then you ignore the table as given as discussed. Now, in this question, before you get to the table, in the top paragraph of the question, you are told that sales volume of 25,000 units can be achieved with a selling price of 13 naira 50 kobo per unit and an advertising campaign of 37,500. So you have sales, we are going to have sales value. So in this case, I need to go and do my working first. Okay, I need to go and do my workings. So we are going to use this page for the income statement, for the detailed calculation, the second page for our assumption, the second and third page for our assumption. Then let me see the additional information given. How many additional information were given to us? 4, 5, 6. Okay, that's one page should be sufficient for that. One page should be sufficient for that. Then let's go to this page for our working. So I will then come here, working. So your working will be based on the activity level or the options that you have in the question. We have option to produce 25,000 units. So I will come here, 25,000. units, 35,000 units, then shut down. So I can draw down my table, do my straight line. Okay. All right then. So number one, sales value. Sales. How do I determine my sales? To get the sales, you are going to multiply units sold with the selling price per unit. Okay? You multiply units sold with the selling price per unit. So under 25, you want to produce 25,000 units. Therefore, here is 25,000 multiplied by selling price. How much is selling price at 25,000 units? We are told that selling price of 13 naira 50 kobo. So here is 13 naira 50 kobo equal to, so bring out your calculator, 25,000 multiplied by 13.5 equal 337,500. Okay, 337,500. I will go to under 35,000 units. So 35 multiplied by, what's the selling price for 35,000 units? 11 naira 25 kobo. Here is 11 naira 25 kobo. What's the total? Bring out your calculator, 35,000 units multiplied by 11.25 equal 393,750. So we are not making any sales under shutdown. Therefore, you just put a dash. So I can close this. Some people are stubbornly stubborn. Despite all my appeal that you should always mute yourself, you still open your mic. For how long? So let's go and post. Or maybe let's just go through the questions so that we can do our posting once and for all. So let's go back to the question. So we are done with our sales. We have accounted for our sales. Okay. So of course, in this particular note, on where you have the sales unit and the sales on the selling price, we also have advertising campaign. So we come back to that one later on when we are doing the cash outflow. But for now, let's flow with the question. So we then go to the additional information. So you are told after the table, you are told that the following additional information has been made available. Number one, there are 50,000 kilograms of material A in inventory. This originally cost 1 naira 5 kobo per kilogram. Material A has no other use, and unless it is used by the division, it will have to be disposed of at a cost of 750 naira for every 5,000 kilogram. Remember my explanation to you under relevant costing. I said that any material that you have in the warehouse, any material that you have in stock are majorly irrelevant. Okay, you are told in this question that 50,000 kilograms of material A and in inventory, and it was purchased for 1 naira 50 kobo per kilogram. So you have that 50,000 in kilogram in the inventory. So any amount, any material you have in the inventory is irrelevant. You don't need it for anything. The company has already purchased it. So the 1 naira 50 kobo is a sunk cost. It's historical cost, it's a past cost. So we don't need that 1 naira 50 kobo. You ignore it because relevant costs must relate to the future. However, examiner now told you that there is now no other use, and unless it is used by the division, it will have to be disposed of at a cost of 750 naira for every 5,000 kilograms. Remember what I told you under disposal value. So if it can be ascertained that the material is no longer needed and it will be disposed of, okay, or it's no longer needed or will not be used, So in that case, the disposal value will represent a saving to the organization. So in this question, you have been told that the material, there is now no other use for this material A, and it can be disposed of at 715 naira for every 5,000 kilograms. So let's go and do our working for that. So when you dispose this material, then you are going to have a saving. So working number 2 now. Material A. Material A, disposal. Okay, so material A, disposal. How are you going to treat this? Examiner has told me that there are 50,000 kilograms of material A in the inventory. Out of this 50,000, you want to produce 25,000 units. You are not buying it. The 25,000 units or 35,000 units that you need for this production, you are not buying it because you already have 50 kilograms of material A in the inventory. Therefore, I'm going to less the 25,000 units that I need. 25,000 units that I need, I will less it from the 50,000 kilograms I have in the warehouse. So the balance that I don't need, I'm going to dispose it off. Out of the 50,000 units that I have, I need only 25,000. The remaining 25,000 that I don't need, what do? I will dispose it off at a cost of 750 naira for every 5,000 kilograms. Therefore, I will divide this one by the balance of 25,000. I will divide it by 5,000, then multiply by 750 naira. Okay, so what do I have here? I would then say, bring out your calculator, 25,000, divide by 5,000, multiply by 750, equal 3,750. Here is 3,750. I will go to the second option. I have 50,000 kilograms of material A in the inventory. I have it in stock. I need only 35,000 units to produce. Therefore, the balance of 15,000 that I don't need, I'm going to dispose it off at 750 naira. So for every 5,000 kilograms that I don't need, I will dispose it off for 750 naira. Therefore, what do I have here? 15,000 divided by 5,000 multiply by 750. Sorry. 15,000 divided by 5,000 multiply by 750. That's 2,250. Here is 2,250. Next item, under shutdown. Under shutdown, I have 50,000 kilograms of material in the warehouse. I need 0, and because I'm not producing, I want to shut down. I need 0 of it. Therefore, the balance of this, the total balance of 50,000 kilograms, I will dispose it off at 750 naira for every 5,000 kilograms that I have. Therefore, what do you have here? 50,000 divided by 5,000 multiplied by 750. 7,500 naira. So this is a saving. This is saving. Okay, this is saving. So I'm done with that. I've treated that information.
Please, why are you dividing by 5,000?
Is in the question. Examiner has already told you for every 5,000 units that you have, it can be sold at 750 naira. So that's why you divide it by 5,000 kilograms. Next item. So remember what I told you. Whenever you are solving question, you have to always state your assumption. So why did you leave? Why didn't you take the original cost of 1.50 naira per kilogram of this material A? So you need to state that your assumption. So when we get there, I will show you all of that. So let's move to the next one. Number 2, additional information number 2. there are 30,000 liters of material B in inventory. Any unused material can be used by another department to substitute for an equivalent amount of a material, which currently costs 1 naira 875 naira per liter. The original cost of material B was 75 kobo per liter, and it can be replaced at a cost of 2 naira 25 kobo per liter. So in this particular scenario, we have three different kinds of costs. Number one, we are given the original costs. Okay, we are given the disposal value of 1 naira 875 kobo per liter, which of course the amount at which the material can be disposed can be given to another department. Then secondly, we also have original cost of material B, which is 75 kobo. Certainly, that 75 kobo is irrelevant. Then thirdly, you're also given the replacement cost of 2 naira 25 kobo, meaning that when you want to buy material B, okay, when you want to buy material B, you are going to pay the current purchase price of 2 naira 25 kobo. So the one that you don't need, which you want to dispose of, you want to give to another department, it will be at 1 naira 875 kobo. So let's go and do the workings together. So number 3, material B under material B, we are told in the question that 30,000 liters of material B are in inventory. Okay, out of this 30,000, you need 25,000. So I will then come here, 30,000 liters minus 25 that I want to produce, that I need. Then move on. Let's go back to the question. So any unused material can be used by another department to substitute. So in this case, for option one, under 25,000, you need 25,000 liters of material B, but you have 30,000, or you have 30,000 liters of material B, but you only need 25,000. So the balance of 5,000 that you don't need, what do? You are going to dispose it to another department at a cost of 1 naira 875 kobo. Therefore, I can then come here to say the difference of this is 5 multiplied by 1 naira 875. Or let me rewrite that. So the difference is 5,000 liters multiplied by 1 naira 875. So what do you have here? So I will say 5,000 multiplied by 1.875 equal 9,375. So that's a saving of 9,375 naira for under option 1. That's a saving. That's a saving. Then let's go to option 2. Under option 2, the company has 30 liters of material B, and 35,000 liters is needed for production. So the balance, so that means the company needs additional 5 liters of material B, because what you have available, which is 30,000 liters, is not sufficient to produce the entire 35. So the extra 5,000 liters that you need, you go and purchase it. At what price? At the replacement cost. Because you need that balance of 5,000 liters of material B. So you go to the market and buy it. So the amount at which you are going to purchase in the market is your replacement cost or current purchase price. So the difference of 5,000 we will multiply with the replacement cost of 2 naira. Let me confirm. Yes, 2 naira 25 kobo. 2 naira 25 kobo. So this will give us what? 5,000 multiplied by 2.25 equal 11,250. This is a cost. It's an additional cost. 11,250. Then under shutdown, the company has 30,000 liters of material B in inventory. 0 is needed. Therefore, the total balance of 30,000 will be disposed of to another department. Okay, will be disposed of to another department. At what price? The same thing as 1 naira 875 kobo. Let me expand this. Okay. So let me write this one. At 1 naira 875 naira. Therefore, what do you have here? 30,000 multiplied by 1.875. So this will give us 30,000 multiplied by 1.875. Sorry, 875 equal 56,250. 56,250. So for option one is a saving. Option 2 is a cost. We are buying it. Option 3 is also a saving. So take note of that. Let's move to the next working. Go back to the question. So we are done with additional information number 2. Again, when you are stating your assumption, you must talk about the original cost of 75 kobo per liter. The reason why you ignore that. So you have to demonstrate how you come about your numbers. So additional information number 3. All production labor hours are paid on an hourly basis. Okay. All production labor hours are paid on an hourly basis. Rumors of the closure of the department has led to a large proportion of the department's employees leaving the organization. The uncertainty over its closure has also resulted in management not replacing these employees. The department is therefore short of labor hours and not sufficient to produce only 25,000 units. The company has capacity to produce only 25,000 units. Output in excess of 25,000 units will require the department to hire contract labor at a cost of 5 naira 625 kobo per hour. If the department is shut down, the present labor force will be redeployed within the organization. So let's determine labor cost. Let's determine labor cost. So in the determination of the labor cost, examiner has told us that the company has capacity to produce only 25,000 units. So if the company, any excess above 25,000 units, additional labor will need to be recruited. So let me increase this line. Okay. All right. Okay then. So number 4, working number 4, labor. Now, how do I determine my labor cost? Again, examiner has told me that the company has capacity to produce only 25,000 units. So if that is the case, for the 25,000 units, at what price? What's the labor cost per hour? What's the labor cost per hour? In this scenario, we are not given labor cost per hour. Therefore, you need to go to the table given to us originally in the question, in the 3rd or 4th paragraph. You go to the table, go and determine labor cost per unit from the information given. So currently, you want to know what is the labor cost per unit. According to the question, you are told that when you look at that table, the budgeted sales and production of Apex as given in the question in the table, you are given labor. 1 hour per unit is 187 naira 500. 187,500 naira is the total labor cost. So to now get labor hour per unit, you need to divide the total cost with the number of units. And number of units produced is 50,000. Therefore, 187,500 divided by 50,000 units will give you the labor cost per unit. So, first thing first, we need to determine labor units, which is equal to total labor cost divided by activity level. Okay, which is equal to the total labor cost is 187,500 divided by activity level of 50,000 units. Therefore, what do you have? Let me write it because of space. Okay, equal to total labor cost is 187,500 divided by activity level of 50,000 units, which is equal to 187,500 divided by 50,000 equal 3 naira 75 kobo. Here is 3.75. So labor cost per unit is 3 naira 75 kobo. Therefore, I want to produce 25,000 units because examiner has told me that the company has capacity to produce only 25,000 units. So I want to produce 25,000. I would then say 25,000 multiplied by 3 naira 75 kobo. What you get? 25,000 multiplied by 3.75 equal 93,750. 93,750. Under option 1, labor cost is 93,750. Under option 2, remember, examiner has told us that the company has capacity to produce only 25,000 units. So, under option 2, which is to produce 35,000, the company has, I will first of all take 25,000 that the company has capacity to produce, which is equal to 93,750. Now, out of 35,000 that I want to produce, I have produced 25,000 based on the capacity of the company. The remaining 10,000 units that I need to produce, I will hire. We are told that the company will hire additional labor, will hire contract staff at the cost of 5 naira 625 kobo. Okay, at the cost of 5 naira 625 kobo. So here would then be the balance of 10,000 units that I want to produce. The company will pay 5 naira 625 kobo. So this will give me 56,250. 56,250. So the total labor cost under option 2 would then be 93,750 plus 56,250. Okay, total will then be equal to, let me do the addition, plus 56,250 equal 150,000 naira. Okay, now that's that. Under shutdown, the company will not incur any labor cost because you are shutting down. No labor cost will be incurred. So let's move to the next one. Yes. Additional information number 4. Additional information number 4. Included in the variable overhead. Dora, go ahead.
Sir,
Stop.
please, how did you get 150,000?
You had it together.
Please add what and what? 93,056.
You had 93,750 plus 56,250.
Okay, sir. Okay. Thank you, sir.
You're welcome. So, additional information number 4. You are told that included in the variable overhead is the depreciation of the only machine used in the department. The original cost of the machine was 300,000 naira, and it is estimated to have a life of 10 years. Depreciation is calculated on a straight line basis. The machine has a current received value of 37,500. If the machinery is used for production, it is estimated that the received value of the machinery will fall at a rate of 150 naira per 1,000 units produced. All other costs included in variable overhead vary with the number of units produced. So there are about two or three information that we need to treat in this scenario number 4. First thing first, examiner has told us that included in the variable overhead is the depreciation of the only machinery used in the department. So when you look at the question as given to you in the table, you are given variable overhead of 150,000 naira. So what examiner is now telling you is that out of this 150,000 naira, there is a depreciation included in the 150,000 naira variable overhead. How much is the depreciation? We don't know, but we need to go and do the calculation based on the information given. Examiner has told you that there's a depreciation of a machinery which costs 300,000 naira, which also have 10 years life. So on a straight line basis, all you need to do is to just divide the 300,000 by 10, meaning that the annual depreciation is 30,000 naira. Okay, the annual depreciation is 30,000 naira. So without wasting time, quickly, let us first of all, because when you want to produce 25,000 or 35,000 units, you need to account for variable production overhead. You need to account for variable production overhead. But for us to be able to determine variable overhead per unit, because ordinarily I'm supposed to divide the 150,000 variable overhead given in the table. I will divide it with the activity level of 50,000 units, which will give me 3 naira per unit. So if I have that 3 naira per unit, I will just multiply with 25,000 units that I want to produce. I will also multiply with 35,000 units that I want to produce. But however, examiner has told us that included in the variable overhead of 150,000 naira, there is a depreciation of a machinery that worth 300,000 naira with a useful life of 10 years. So in that case, remember, depreciation is a non-cash item. That's one of my explanations. I even reminded you earlier today. Depreciation does not involve movement of cash. As a result, whenever you are given a depreciation in a question, you need to ignore it. So if the depreciation has been included in a particular cost item, you need to remove the depreciation. In this case, we are told that the depreciation has been included in the variable overhead. Therefore, you need to first of all calculate the depreciation since it is not given to us. You calculate the depreciation, then you now less from the variable overhead. So whatever the balance you have thereafter, you divide it with number of units, which is 50,000 units. So that will give us variable overhead per unit. Once I have the variable overhead per unit, I will then multiply with 25,000 units that I want to produce. I will also multiply with 35,000 units that I want to produce. So quickly, first thing first, let's determine the depreciation. So working number 5, depreciation. So examiner has told us that it's on a straight line basis. So I will just say depreciation equal to the cost of the machine is 300,000 naira. And this machine has 10 years life. Therefore, annual depreciation will then be equal to 30,000 naira. So that's that. I will close this. I'm not doing anything here yet. Okay then. So we have calculated the annual depreciation. Working number 6 now. I need to determine variable overhead per unit. So I want to determine variable overhead. So variable overhead. How am I going to determine my variable overhead? Examiner has told me that I'm looking for, first thing first, I'm looking for variable overhead per unit. Okay, variable overhead per unit will then be equal to, examiner has given me variable overhead of 150,000 naira. This 150,000 naira included, because of space, variable overhead per unit equal to, so we are given variable overhead of 150,000 naira. We are now told that inside this 150,000 naira, there is annual depreciation of a machinery of 30,000 naira that we have calculated. Therefore, we now divide it with the activity level. The activity level, the budgeted activity level is 50,000 units. Therefore, the variable overhead per unit will then be equal to 120,000 divided by 50,000 units equal, that's 2 naira 40 kobo. 2 naira 40 kobo is the variable overhead per unit. So now that I have the variable overhead per unit, I can then go ahead. I can go ahead to determine the total variable overhead for option 1 and 2. Okay. I will then come here. I want to produce 25,000 units. So I will say 25,000 multiplied by 2 naira 40 kobo equal. Here is multiplied by 25,000 units equal 60,000. So under option 1, the company will incur variable overhead of 60,000 units. Sorry, 60,000 naira. Then under option 2, 35,000 multiplied by 2 naira 40 kobo equal 35,000 multiplied by 2.4 equal 84,000 naira. So there is variable overhead of 84,000 naira under option 2. So move on to the next one. We are still on that same paragraph. So in that paragraph, we are now told that the machine has a current resale value of 37,500. Okay. If the machinery is used for production, it is estimated that the resale value of the machinery will fall at the rate of 150 naira per 1,000 units produced. So all other costs included in the variable vary with the number of units produced. So we are now told that this same machinery that has 10 years life, we are told that the machine has a current resale value of 37,500. If the company wants to sell it, if the company wants to sell the machinery, they are going to, as of today, the company will earn 37,500 naira. However, we are now told that if the machinery is used for production, if this machinery is used to produce 25,000 units or 35,000 units, it is estimated that the resale value of the machinery will fall at the rate of 150 naira per 1,000 units produced. So let's treat that information. Let's treat that information. First thing first, let's draw our table for that. Okay. All right. That's too big. All right. And then this other side shut down. Okay then. So working number 7. For each working you are doing, you should be stating your assumption. As you are reading the information, you'll be stating your assumption, pari passu, or side by side. Okay then. So what do we want to do here? Machinery. We are told that the current resale value of the machinery is 37,500. So if the machine is used for production, it will fall by 150 naira for every 1,000 units produced. So machinery. Machinery So if today the company wants to sell the machine, the company will earn 37,500. But this 37,500 will not work for now because the company wants to use it to produce 25,000 and then 35,000. So let us check. First thing first, we need to determine the fall in value, reduction in value. So I will say reduction in value of the machine. So for me to get the reduction in value in the machine, I want to produce 25,000. Examiner has told me that for every 1,000 units produced, with the machine, then the value of the machine will drop by 150 naira. Therefore, divide by 1,000 units, multiply by 150 naira, equal. I would then say 25,000 units divided by 1,000 units, multiply by 150, equal. So there is a fall in value of 3,750 under option 1. Under option 2, I want to use the machine to produce 35,000. So for every 1,000 units produced, it will fall by 150 naira. Therefore, what's the total reduction? So 35,000 units divided by 1,000 units, multiply by 150, equal 5,250. 5,250. Under option 3, which is to shut down, we are not using it to produce anything. We are not using it to produce. So that means the company will earn the entire 37,500 when the machine is disposed. So there is no reduction in value. So at this point, then the current receive value, the current receive value of the machine the current receive value of the machine is equal to 37,500, 37,500, 37,500. So if the company wants to sell this machine as of today, the company will earn 37,500. Therefore, because I want to use the machine to produce 25,000 and 35,000, so the value has reduced. So reduction in value, you need to less reduction in value of how much? Here is 3,750. Here is 5,250. Here is 0. Therefore, what do you have as the net sales value? Net sales value or net resale value? Net resale value. So what do you have here? 5,250 minus 37,500 equal 32,250. 32,250. Here is 37,500. Then here is 37,500 minus 3,750 equal 33,750. Here is 33,750. So that's the net receive value that the company will earn from the disposal of the machinery. So let's move on to the next one. So additional information number 5. We are told that included in the fixed production overhead is the salary of the factory manager, which amounts to 30,000 naira. If the department were to shut down, the manager would be made redundant with a redundancy pay of 37,500. All other costs included in the fixed production overhead are general factory overheads and will not be affected by any decision concerning the factory. Remember, based on my previous explanation to you, now, in this question, examiner has given you, you are told that included in the fixed production overhead, when you go to the table in the question, the fixed overhead is 75,000 naira as given in the table. You are now told that included in the fixed production overhead is the salary of factory manager, which amount to 30,000 naira. See, irrespective of the activity level, irrespective of whether the company produced 25,000 units or 35,000 units, the factory salary, the factory manager's salary will be paid. However, ordinarily, we are supposed to ignore, I would have ignored the 30,000 naira for factory manager's salary. But because of the fact that examiner single-handedly mentioned factory manager's salary out of the fixed production overhead, single out factory manager's salary out of the fixed production overhead, it means that examiner wanted to use it. Other than that, because when you look at the last statement in this paragraph, you are told that all other costs included in the fixed production overhead are general factory overhead, which simply means that out of the 75,000 naira, if you take out 30,000 naira as factory manager salary, then the remaining 45,000 naira is general overheads, is general factory overhead. So it means that this 30,000 naira for factory manager salary is relevant, and we are going to account for it. That is the only reason that will make us to take it, if not because of this last statement. Ordinarily, if I'm just told that included in the fixed production overhead is salary of the factory manager, which amounts to 30,000 naira, if there's no additional information, I will just ignore it because it will not change. Whether I produce 25,000 units or 30,000 units, the factory manager will surely be paid. Therefore, in as much as my fixed cost will not change, then it is irrelevant. But because of the last information given in this paragraph, where you are told that all other costs included in the fixed production overhead are general factory overhead and will not be affected by any decision concerning the factory. So because of that statement, that's why we're accounting for the factory manager's salary. So it will be part of our information. I mean, part of the figures that we are going to include. So there is no need for working for this one. So let's move on to the next item. So when we get to cash, when we're picking our numbers, we'll pick the factory manager's salary. Then number 6, the non-production cost charged to the factory is an apportionment of the total non-production cost incurred by the factory. Now, one thing you need to know, anything that has to do with apportionment is irrelevant, okay? What do you mean by apportionment? When overhead is incurred, remember, when we had the operating statement, I mentioned to you what overhead is all about. I said overhead is the same thing as indirect cost. Indirect costs include all the costs that will be incurred in the factory, like the rents, like electricity, like lighting, heat, water, rates, all those costs that will generally be incurred in the factory are the overheads. Okay, they are the overheads, or which we also call indirect costs. So all these costs will be accumulated, they will be incurred. All of them will be accumulated and apportioned or distributed among each department, among several departments or units within the organization, on whatever basis that the company has agreed. It could be on the basis of a floor space, it could be on the basis of a number of employees in each of the department and all of that. But the bottom line is that anything that has to do with apportionment of costs is irrelevant, okay? Any apportionment of cost is irrelevant. Remember, relevant costs must relate to the future. When you are doing apportionment, those costs would have been incurred already. That's why you are apportioning it. So the rent, the electricity, the heat, the water rate, all those expenses has already been incurred, and that's why they are apportioned. So any apportionment, I repeat, any apportionment is irrelevant cost. Therefore, that additional information number 6, we don't need it for anything, we ignore it. Next item. We're now told that the committee will be meeting in a week's time to prepare its report to the management on the line of action management should follow either one of the marketing manager's proposals or to close down the factory. So these are the relevant workings that we need to do. At this point, let us go and post. So first thing first, let us pick all the cash inflows. Let's pick all the cash inflows. So we started from the sales value. So sales value for option 1 is 337,500. So let's go and post 337,500, option 1. So I will then come here and says, working number 1, here is 337,500. Let me write that. Then option 2, what do we have there? 393,750. 393,750. Under shutdown, there is no sales. So let's go back. Let's go and pick other cash inflow that we have there. For material A, we have a disposal value. We have a saving for option 1 and option for the options. So for option 1, 3,750, 2,250, then 7,500 for option 2 and 3. So let's go and post that. 3,750. Material A, savings arising from the disposal, 3,750, 2,250, then 7,500. Next item, let's go and pick another savings or cash inflows. Material B. Under material B, we have saving for option 1. We also have saving for option 3. For option 2, it's a cost because we are buying additional material B. We are buying the liters, 5,000 liters, additional 5,000 liters. So here is 9,735. Sorry, 9,375, then 56,250. So material B, that is a saving. Here is 9,375 dash. We are not saving anything under option 2 because we are buying the additional 5,000 liters. Then here is 56,250. Next item, there is another saving for disposal of the machinery. That should be item number 7. Yes, item number 7, we have net receive value. Net receive value of 33750. Machinery or machine disposal. Machine disposal. Working number 7. I think this is working number 2. Working number 3. Okay. Okay. How much is the receive value again? You guys should be calling the number for me now.
38,750.
33750. Thank you. Then
32,250.
32,250. Thank you.
37,500.
37,500 for option 3. Okay, then. So let's move on. There is no other saving again. So at this point, I can find the total inflow. So let's find the total inflow. Add it up. 33,750 plus 9,375 plus 3,750.
384, 375.
384.
384, 375.
Thank you. So this is total inflow. This is A. Yes, other ones.
For the shutdown, 101,250.
101,250. 101,250.
For the 35,000 units,
428 250.
428
250.
250. Thank you, guys. You have made my job easier instead of scrolling down. Okay, then. So this is total inflows. So let's do outflows. All the cash outflows, let's account for them. So I will then go back to my workings from working number 2. From working number 3. We have cash outflow for material B under option 2, which is 11,250. We are buying additional 5,000 liters of material B, 11,250. So let's go and account for that. Material B. Working number 3. Dash. 11,250. Dash. Next item. Next item is working number 4. Labor costs. Labor cost for option 1 is 93,750. Option 2, 150,000. Labor. Labor costs. That's working number 4. 93,750. 150,000. Dash. The next one. Working number 5. That's depreciation. It's not part of what we are looking for. Then working number 6. Variable overheads. The variable production overhead, 60,000 for option 1, 84,000 for option 2. Variable overheads. Let me shorten it. Variable overhead, working number 6. 60,000, 84,000. Dash. Next item. Next item, that's working number 7. So we have already accounted for working number 7, which is the received value. There are additional costs in the question that we have not accounted for. So let's go and pick them. Number 1, we have factory manager salary. So I will come here, factory manager salary, 30,000 each. We are only accounting for this 30,000 because of the fact that examiner specifically single out the factory manager from the factory production overhead. And we're now told that every other cost are general overhead. And you know, general overhead is irrelevant cost. So because the factory manager was singled out, so that's why we are accounting for it. We are taking it. Ordinarily would have ignored it. Okay, then. Then in the question, we also have redundancy pay. Redundancy. We are told that if the factory is shut, if the business is shut down, the company will pay redundancy pay of 37,500. Not only that, we also have advertising campaign. Advertising campaign. On the fourth paragraph, where you pick the sales value, where we pick the selling price. Advertising campaign is in the third paragraph. Other option to produce 25,000 units. The advertising campaign is 37,500. Other option to produce 35,000 units. Advertising campaign is 52,500. So here is 37,500, 52,500. Let me confirm. Yes, 37,000, correct. So that's that. So these are all the costs. Please let me know if there are any other costs in the question that we want to pick, but we have not included in this calculation. So far, this is what I think. We have picked all the numbers. So let's find the total each. I know this one to be 37,500. So give me the rest.
For the 25,000 units,
Yes.
221,250.
221,250. Thank you. This is total cash outflow, which is B. So then
For the 35,000,
yes.
yes, sir. For
So,
the 35,000 units,
yep.
327,750.
327,750. So let's find the difference. So the difference will now give us a net cash inflow. So it could be net cash inflow or net cash outflow, which is A minus B. But because A is greater than B, it will be net cash inflow. So what's the difference? 384,375 minus 221,250. What's the E out of?
163,125.
163,125. Okay.
100,500.
100,500.
100,500.
500.
Okay.
63,750.
63,750. Thank you, guys. So we have provided the detailed calculation. Had it been we had to advise, would have selected the one that would produce the highest net cash inflow, which should be option number one to produce 25,000. But examiner did not ask us to advise. You are only asked to provide detailed calculation, and that is what we have done. Guys, what we have done is not sufficient. You can see how we have been sweating since because of this only one question. We have spent over 1 hour because of this only one question. So it is not sufficient for you to do all this calculation without stating your assumption. You are expected to state your assumption at all times. So what did you do under each of them? So I would still love to solve one more illustration, but let me stop sharing this so that we can, let me show you the assumptions. Let me demonstrate for you the assumptions, how you are supposed to do it. But first thing first, do you have any question for me under this, the screen that I'm sharing so far before I switch? Any questions so far? So I'm confused. So, Joy, where are you confused?
Sir, you've passed it a long time.
Oh, okay.
I
Where?
got confused at the points where you were explaining the machinery, the reduction in value, current resale value. I don't know. I
Okay.
think my network went off. You just became very, very fast. I couldn't pick what you were saying. Then you went back to normal.
So this is the screen I'm showing you now. This is where you are talking, right?
Yes.
So, but do you now understand how we got the numbers? Or you still want me to explain?
Don't worry. I'll be listening to the class.
Recordings. It's okay, no worries. Okay then.
Okay.
All right. So let me stop sharing this so that I can move to the I need to explain to you the
Yes, I have a
addition.
question.
Yes, talk to me.
Can we scroll back to the
I should scroll down or scroll up. Is it this one?
income statement, the inflow part?
Okay.
No, income statement, the inflows. I want to confirm
Yeah,
a
this is
figure.
it. Okay. Are you done?
Okay, sir. Another question, please.
Okay, talk to me.
Yes. So you were saying that if they ask us to make a decision, we'll
Yes.
go to the first option.
Yes,
Now,
because
okay.
because the first option has the highest net cash inflow, which is 163,125 relative to option 2 and 3.
Okay. Okay, no problem. Thank you.
You're welcome.
Excuse me, sir, please.
So Nancy, are you done?
Excuse me, sir.
Yeah, Tifer, talk to me.
Sir, please, how did you get the advertisement campaign?
Is there in the question in the third paragraph where you have the sales unit and the selling price? In the where you have 2 bullet points. The first one, we are told that a sales volume of 25,000 units can be achieved with a selling price of 13 naira 50 kobo per unit and an advertising campaign of 37,500, or a sales volume of 35,000 units can be achieved at a selling price of 11 naira 25 kobo with an advertising campaign costing 52,500. So is there in the question in the third paragraph?
Okay, thank you very much, sir.
You're welcome. Okay, then. So quickly, let me explain what you need to do for the assumptions, because like I mentioned to you, you will never earn your full mark without stating your assumption. So let me see. Where am I? Okay, I want to share. Let me know if you can see my screen, please.
Yes, sir.
Okay, then.
No,
So,
yet, sir. Okay. Yes, sir.
you can see it now, right? Okay, then. So, let me quickly show you. Why is this one dragging? Allow me, man. Okay. So, I don't know. Let me quickly show you how you are expected to state your assumptions. That's illustration number 4, Adecco. Okay, so this is the same question. In this one, it is called Tintin Nigeria Limited. So let me just show you the So I believe you are seeing the assumption I'm displaying for you.
Yes,
Guys,
sir.
so this is how you are supposed to state your assumption, which is similar to what we did in the class last week. Okay, so under the advertising campaign, This is a relevant cost and has been included in the calculation, because if you don't advertise, there is no way the company will be able to generate the sales. The sales that we have calculated so far of 337,500 or 303,750 for option 1 and 2. The company will not be able to make the sales if they don't incur the advertising campaign. Therefore, the advertising campaign is relevant. You have to account for it. Then, in the additional information number 2, we have material. So the assumption you are supposed to state is that the excess of material A above the required, the excess of material A above the required volume will be disposed of at 750 naira per every 5,000 units, which of course, that's our calculation. This disposal value represents a saving to the organization. The original cost of 1 naira 50 kobo per unit is irrelevant and therefore ignored. So we have a saving of 25,000 units. A saving of 25,000 units for every 5,000 units produced at 750 naira. So we have that saving. That's what we accounted for. Then further, the original cost of material B of 75 kobo per liter is an historical cost, or you can call it an historical cost or a sunk cost, and not relevant to the calculation. So that's why we ignore that 75 kobo. The 30,000 liters of material B held in store will be used at no cost. Okay, will be used at no cost because the company has 30,000 liters. Out of the 30,000, we use 25,000 liters. We have balance of 5,000 liters. So that balance of 5,000 liters represents a saving. So we are given a saving of 150 naira for every 1,000 unit, for every 1,000 liters. So we've got our late savings there. Then, of course, the unused material for option 1 and 3. You know, in option 1, you need 25,000 liters, but you have 30,000 liters, but you need only 25. The balance of 5,000 liters that you don't need, you dispose it off. Okay, so that's a saving. Then in option 3, the entire 35,000 liters that is not needed is being disposed of. So, and that's what I'm trying to explain here, that the unused material for option 1 and 2, the unused material B for option 1 and 3 will be disposed of to another department at 1 naira 875 kobo. This represents a saving. So I also stated further, however, since the material available is not sufficient for option 2, the extra 5,000 liters, that is 35,000 liters minus 30,000 liters available of the material needed will be purchased at a replacement cost of 2 naira 25 kobo. So this is to simplify, so that when you are reading on your own, you will understand how the numbers are being gotten. Then, additional information number 3, that's where you have the labor cost. In this case, I mentioned that labor cost is determined by multiplying the labor cost per unit of 3 naira 75 kobo. See working number 4. Okay, so I've also done working. Apart from the assumption, we also have working here. These are the workings that we did, the same working that we have done. Okay, say working number 4, with the maximum capacity of 25,000 units for option 1 and 2. Since option 2 require additional 10,000 units to produce, that is 35,000 minus 25,000, the extra has been calculated at 5 naira 625 kobo per unit. So this is to buttress the point and to make it very easy for you how I got the numbers, so that when you are reading on your own, you'll be able to follow through. Then number 5, additional information, assumption number 5, variable overhead. This is relevant cost and has been included in the calculation. However, annual depreciation of 30,000 naira, see working number 5, we have calculated how we calculated the annual depreciation. Included in the original variable overhead in the table given was deducted before calculating the variable overhead. I'm just explaining how we got that 2 naira 40 kobo. Also see working number 6. Then number 5, assumption, machinery. The net received value of the machinery was calculated after deducting the reduction in value of 115 naira per every 1,000 units produced on the machine from the current received value of 37,500 for option 1 and 2. The machine was not used for option 3, hence the entire received value of 37,500 was accounted for, was included. Okay, then number 6, assumption, factory manager salary. Look at what I said here. Ordinarily, the factory manager salary is a fixed cost, which is a fixed cost. Let me take it. Ordinarily, the factory manager salary is a fixed cost and will not change irrespective of the activity level. However, since the factory manager salary of 30,000 was singled out of the fixed production overhead of 75,000 naira and other costs regarded as general factory overhead, the factory manager salary has been considered as relevant cost in the calculation. So that is how I come about my that's the reason why we included the factory manager salary. Then number 6, assumption, non-production cost. The non-production cost of 75,000 naira is an apportionment and therefore irrelevant to the calculation. So I've explained that to you earlier. Then number last, redundancy fee. The redundancy fee of 37,500 is attributable to the option to shut down. This is a relevant cost. So we have accounted for that. So these are the assumptions you are supposed to state. Okay. This assumption carries more mark than even the calculations that you have done. And it is important at all time, in addition to your calculation, you must show your assumptions. You have to show your assumption for you to be able to earn your full marks. Look at this particular requirement A is 20 marks. You can't do calculation alone and earn the 20 marks. It's not possible. So it may well be that the calculation is about 7 or 8 marks. Then, of course, the assumption is 12 marks. You have to state your assumption. You also show your workings. Okay, so that you have to show your workings so that examiner will not feel that, okay, maybe you giraffe somewhere. Okay, you copy somewhere. That's why you are not showing your assumptions. You are not showing your workings. You have to show your workings. Okay, to demonstrate to the examiner how you come at your number, how you calculated your numbers. So it's not, so these are the requirements, these are the things you must do. Okay, these are the things that you must do. So finally, in this question, we also have number B and C of the requirements. In the number B of the question, examiner is asking you, okay? In this number B, examiner is asking you to discuss, okay? Excuse me, let me just read. So in this number B, you are asked to discuss the management accounting technique and principle that a management accountant will apply in preparing calculation to support your answer, to support management decision in such a circumstance as above, an additional 10 bonus marks in this question. Okay, examiner is asking you to discuss management accounting technique and principle that can be applied in the situation as above. So I've already explained to you earlier today what you are supposed to do. In this particular requirement, if you don't know what you are doing in the question, there is no way you can be able to earn this cheap 10 marks. Examiner is asking you the management accounting technique. Remember, this question has to do with decision making. So now I've told you, the marginal costing technique is a technique designed principally to aid managerial decision. So because this question has to do with decision making, therefore, the management accounting technique that can be used, okay, that can be applied in the situation as above is marginal costing technique. So in this case, what are you supposed to do? You have known that, okay, it is marginal costing technique that can be used to aid managerial decision. Fine. What are you just going to say marginal costing technique? So you need to explain. Number one, what you are going to say is that, the management accounting technique that can be used in the situation as shown above is marginal costing technique. For this purpose, marginal costing technique is a technique. So you begin to explain, you give the definition of marginal costing technique. Then you now talk about the areas of application of marginal costing technique. What are the uses? What are the areas that you can apply the technique of marginal costing? Okay, so these are the things you are supposed to do. Then the second part, because there are two parts to this particular requirement, examiner is asking for management accounting technique. At the same time, the principle What are the principles? In your own calculation, what principle have you applied? We have applied relevant costing principle. Remember, relevant costing is not a technique, rather is a principle. So again, under the principle, for you to answer this, what you're supposed to say is that, okay, the principle that can be applied in such a circumstance is relevant costing for decision making. Then you now explain what is relevant cost. Okay, what is relevant cost? Relevant costs are costs that are directly attributable, all those stuff. You talk about it, then you talk about the qualities or the attributes, the determinants, the factors, the criteria, the principle, okay, of relevant costing, which has to do with all those three line items: future, incremental, and then cash flow. By the time you begin to talk about all of this, in fact, a whole page is already full for you to be able to earn your full mark. You can't just talk about few line items and think you are going to earn 10 marks. That's not possible. You have to explain in details. So this is what you are supposed to do under the number B requirement. Let me show you what I've done here, how I did it. Let me show you how I did it. Yes, look at, this is the solution I provided for the number B requirement, number B1. So the management accounting technique that can be applied for the calculations above to support management decision is marginal costing technique. For this purpose, marginal costing concept may be described as a decision-making technique designed principally to analyze and compare the relevant costs and associated benefits of a particular course of action in making managerial decision. It is also known as cost-benefit analysis, in that a cost item must be capable of being classified as either variable or fixed cost. With the help of marginal costing technique, management can concentrate on the causes of action that are critical and strategic to the business success to achieve a targeted organizational objective. Marginal costing technique is designed essentially to aid managerial decision in the following circumstance. Number one, deleting of a segment, that is discontinuance of a non-profitable segment, make or buy decision, acceptance or rejection of a special order, shutdown of capacity, optimal product mix, linear programming, cost volume profit analysis, adding of a new segment. These are the areas you can apply the concept of marginal costing, of marginal costing. So if I want to talk about, if you like, you can talk about each of them in summary, but this is sufficient. This is sufficient. So there is no need. If you want to demonstrate too much skills, then you can be talking about each of them just in summary. What do you mean by deleting of a segment? What do you mean by make or buy decision? So we are still going to do them in details when we get there. Most of them are topic on their own. So the next topic we are going after relevant costing will be a short-term decision. So under short-term decision, we are going to talk about deleting of a segment, make or buy, acceptance or shutdown of capacity, all of that. So optimal product mix is a topic on its own. Linear programming is a topic on its own. Cost volume profit analysis, all these are topics on their own. So you see the way I just explained to you, that for you to be able to earn your full 10 marks, you must be able to demonstrate your skills in this area. So for the second part of this number B, which has to do with the principle. So I stated that the principle that can be applied to the calculation above is relevant cost for decision making. Relevant cost is defined as costs that are directly attributable to a course of action in making managerial decision. The management accountant will apply the relevant costing principle to the calculation by considering only the costs that will be incurred purposely on the course of action or have economic and financial consequence to the decision. In applying relevant costing principle to the management decision, the following attributes must be considered, including 1, future, 2, cash flow, 3, incremental. You now begin to explain each of them. Okay, so this is what you are expected to do for you to be able to earn your full mark. For you to be able to earn your full mark. So that is for that. This is what you are supposed to do. Somebody is asking a question. Let me check that. Please, Toluwani is saying that, please, the non-production cost, where did you get the figure, sir? Is in the table. We have been, the non-production cost is in the table, 75,000 naira. You see there in the table given. Is marginal technique the only technique? Yes, because you remember what I told you when I was taking you operating statements. I said specifically that marginal costing technique is a technique designed principally to aid managerial decision. So whenever you are talking about decision making, you need the knowledge of marginal costing. You don't use assumption costing. Assumption costing is a technique designed for generally accepted accounting principle for reporting, for external reporting purposes, just like you are doing your profit or loss account. So we don't use assumption costing for decision making. Purely, it has to be marginal costing technique. Okay. Please, can you share solution? Please, can you share solution? The one you just read. Well, I don't share. This is a proprietary information. I will talk about this one later on, but first thing first, let's complete the class. So I will talk about this material later on. Okay, then. So now, number C part of the question. Yusuf, you want to say something?
No,
Okay.
sir, no, sir.
All right, then. So the number C part of this question, our examiner is asking you, quickly, examiner is asking you in the C part that a customer has just placed a special order for 25,000 units of Apex, and the customer is willing to pay 12 naira per unit. Advise the management whether to accept or reject the order. Assume that for any shortfall in material A required to produce the order, it can be bought at a price of 2 naira per kilogram. Another 10 marks bonus, another 10 marks bonus, or 10 bonus marks. C, I will not talk too much on this number C for now because it's a topic on its own. Like I mentioned, when we finish short-term decision, when you finish relevant costing, we are moving to short-term decision. You know, this is an exam question. So it is believed before this exam is set, it is believed that you won't have covered the syllabus A to Z. So examiner is mixing together different things, three different topics in this particular question. You have operating statement in this question. You have relevant costing. Now your examiner is giving you short-term decision. So you are talking about special order, acceptance or rejection of a special order. This is what this number C is all about, which of course we have not discussed it. So you need to first of all understand what do you mean by acceptance or rejection of a special order? What are the underlying principles? What are the procedures you are supposed to follow? What are the format? I mean, what is the format you are supposed to use? What are the qualitative and non-qualitative factors you have to take into consideration as it starts to do with acceptance or rejection of a special order? So you will not appreciate this number C if I begin to solve it now. But however, let me just show you how I did it in this material before I close it so that we can move to the next one. You can see only one question we have been solving since is a big question for that matter. And this is the likely question you are going to see on the day of your exam. These are the kind of questions you are going to see. All the questions we have solved so far, they are all past questions. But the question you will see that you'll be sweating. Yes. In this number C requirements, of course, this has to do with acceptance or rejection of a special order. So this is how I solved it. In carrying out the incremental analysis of the special order, because that's what you are supposed to do. You're supposed to carry out incremental analysis by comparing the revenue from the special order versus the relevant cost of making the special order, whether it will result to additional profit or loss to the organization. If it has additional profits, if the special order will generate additional profit for the organization, the company will accept the order. But if it's a loss, the company will reject the order. So that's basically what we are going to discuss when we get to short-term decisions. So in carrying out the incremental analysis on the special order, only the benefits, that is cash inflow, and relevant costs, that is cash outflow, associated with the special order will be considered. This means that any receipt or payment not related to the order will be ignored. So your focus is on the special order. So any other cost or any receipt or payment that is not related to the special order, you have nothing to do with it. So according to the question, when you go to that number C requirement of the question, Look at what the examiner is asking you to do. In this number C, so you are told that a customer has just placed a special order for 25,000 units of Apex and the customer is willing to pay 12 naira. So to get the sales value from the special order, you multiply 25,000 units with 12 naira. So that's that. So now that's what I've done here. Let's go back there. Okay, so 25,000 units multiplied by 12 naira, that gave us the 300,000. So under material A, when you want to produce, you are going to need material. So, but under material A, 25,000 units, there's a saving of 25,000 units at 750 naira. We got 3,750. We already have that number before. Then relevant cost of making the special order. You want to produce 25,000 at what price? In this case, for the material B, remember in material B, you are going to purchase this 25,000 units at the replacement cost of 2 naira 25 kobo. That's how we got that 56,250. Again, labor cost. Remember, the labor cost that you are going to use there, because the company has normal operating activities, the normal activities that are ongoing in the company, because this is a special order, but the activity level that is driving this special order, because you want to produce 25,000 units for the special order, and it will be bought at 5 naira 625 kobo. So you are paying labor for 5 naira 625 kobo. So it's an additional cost. The variable overhead of the 25,000 units at 2 naira 40 kobo. We've already done variable overhead per unit to be 2 naira 40 kobo. So we got 60,000. At the end of the day, the extra contribution that the company will earn from this special order or extra profit is 46,875 naira. Then, in as much as the special order will generate additional profit or contribution to the organization, the special order should be accepted at 12 naira, since it will produce extra contribution of that amount. So not only that, I did not just solve the number C requirement, I also provided assumptions, how I came about my numbers. Number one, material A. The balance of material A of 25,000 units, that is 50,000 units minus 25, will be disposed of at 750 naira per unit for every 5,000 units produced. This represents a saving. So I've explained that. Material B, this will be purchased at a replacement cost of 2 naira 25 for the special order to produce. Then number 3, labor cost. The department is short of labor hours. The maximum of 25,000 units have been produced from the normal operation. The special order of 25,000 units will be produced at a cost of that, representing the cost of hiring contract labor. So that is how I've solved the question. The entire marks allocated to this question is 40 marks. Okay, you can see it's a very big one. It's not something you can do within 30 minutes and you think you earn the 40 marks. You have to sweat. 1 hour, you are still on this question. And that's why we usually say that whenever you are solving a question on the day of your exam, because when you are in the class, you have the luxury of time to do anything you want to do. Okay, you can spend several hours, but once you are in the exam hall, examination tension, okay, anxiety, everything may take the best of you. And that's why I advised the other time that whenever the first thing you need to do once you are given an exam question is to take a very deep breath, okay? So that will allay your fear, calm your nerves, go straight to the question, read through number 1 to number 7 of the question, go and select all the cheapest one. First thing first, don't even look at the compulsory question. Don't start from the compulsory question, go to the cheapest one first. If you have any written ones, go there, first of all, pocket about 2 to 3 questions, okay? 15 marks, 20 marks, pocket about 2 to 3 or 3 or 4 of them. Then make the compulsory question your last attempt. Come and devote your time to the compulsory question, articulate and think about how you can maximize the scores on the compulsory ones. But if you start from the compulsory, 1 hour, 2 hours, you are still there, you won't know that time is already gone. By the time invigilator tells you that, oh, 30 minutes more, and you are still on question number 1. God Almighty. That is, come back next time. Come back next time, because it will be very difficult for you to solve the remaining 4 questions within 30 minutes. Okay? So you won't be able to concentrate again. So that's why you have to time yourself when you're in the exam hall. So that's that. So Kunle, talk to me. You are raising hand.
Thank you very much, sir.
You're
I know acceptance and rejection of a special order is still a topic we'll take in the course of the.
Yes, it's a topic on its own.
Yes, sir. But then, under the relevant cost of making the special order of 25,000 for material B,
Yeah.
you said that we are going to get to the 25,000 units at the replacement cost of 2 naira 25 kobo. And I begin to wonder, why
Yep.
do we have to source for a replacement when we have 30,000 units of material B in stock?
No, no, you have to buy material B. Remember, when you look at the question, let's go back to the question. Let me show you. Look at first thing first in the requirement. Look at what the examiner is telling you here. Assume that any short. So we are talking about material B, isn't it, Kunle? Hello, Kunle?
Yes, sir. Yes, sir.
So when you look at material B in the information given to us, in this question, we are told that there are 30 liters of 30 liters of material B in inventory. Remember, like I told you, all these numbers that you have, 30 liters, 50 kilograms, they are for normal operation of the company. Okay, they are for normal operation. So your focus is on the special order, which has to do with 25,000 units that you want to produce for this special order. This 25,000 units that you want to produce for special order. So your focus is whatever the you are going to take, whatever the inflow, the cash inflow that is coming from the special order versus how much cost you are going to incur on the special order. Now, for this material B, okay, because that's your requirement. For this material B, let me quickly go there. So for this material B, you surely need 25,000 units, okay? Because already out of the 30,000 units you have in the warehouse, 30,000 liters, you have already used it to produce 25 in the normal operation. But your focus is on this special order. You are going to buy those 25 liters for the special order. So you are less concerned with whatever you have in your warehouse. So since you are buying the 25,000 liters or units, of course, at what price? It must be at a replacement cost of 2 naira 25 kobo. So when you look at everything, from the sales down to the variable cost, you see that I mentioned 25,000, because it is specific to the special order, not related to the normal operation of the company. Okay? Because another thing you are going to learn under acceptance or rejection of a special order is that the special order is only available when the company is not, when the company has spare capacity, when the company is not fully utilizing the resources it has. For example, you have capacity to produce 100,000 units, but currently you are only producing 70,000 units. So it means that you have spare capacity for 30,000. So if you now have special order to produce, so it is from your spare capacity you are going to use to produce the special order, because your normal operation has already taken 70,000 units. So the remaining 30,000 is what you have as spare capacity. So when it has to do with acceptance or rejection of a special order, it is believed that the company will utilize the spare capacity to execute the order. And generally, the price from the special order is usually lower than the company's normal market price. Okay, it's usually available at a price below the company's normal price. Okay, so all of these things we are going to discuss it when we get to short-term decisions in details. All right, including the qualitative factors and then the quantitative factors as it has to do with acceptance or rejection of a special order. Yep. So that's it. Wow. So This is not good. So only one question we're able to solve today. We can't go beyond this. It's already almost close to our closing time. If I begin an additional question now, we may not be able to complete it. So we may not be able to complete it. So this is where we are going to, somebody is asking me a question. Please help us share the solution. No worries, you will share, you surely see it. Congress, you surely see it. So, okay. Any question for me so far? Yeah. So if there are no other questions, so I think that's it. I will see you again next week by the grace of God. Yeah, somebody, you want to talk? Amon? Ify, you want to talk?
Yes, sir. Please, I wanted to find out why is non-production cost an irrelevant cost?
Non-production cost is not a relevant cost. It's not related to production. Okay?
Okay.
Non-production
Okay.
cost, it could be fixed costs, it could be fixed admin, fixed selling distribution, provided it is not related to production. All right? So that's why it is not relevant. We ignore it.
Thank you.
You're welcome. Okay. All right, guys. Thank you for your time and understanding. I will see you again next week by the grace of God when we shall continue. We have one more illustration on this. So that's what we are going to treat in our next class. Then thereafter, whatever minutes or hours we have left, we are going to spend it on the short-term decisions. Okay? Thank you, guys. Good night.
Thank
Bye.
you. Good night, sir.
Good night.
Good night. Thank you so much.
Good night.
Good night, sir.
Thank you.
Good night, sir.
Good
Thank
night.
you.
Good night. Bye.